From the information given here, you are required to calculate stock or inventory turnover ratio. Now the information here includes sales, sales return, opening stock, purchases and closing stock. So now students, we know that the formula for stock turnover ratio is equal to cost of goods sold upon average stock. The average stock can be calculated as opening stock plus closing stock divided by 2. That means average stock is equal to opening stock plus closing stock divided by 2. Opening stock is given to be 1 lakh. Closing stock is given to be 50,000 whole divided by 2. That is 1,50,000 divided by 2. So we get average stock as 75,000. So students, let us mark it as equation number 1 so that we can recall it later, that our average stock based on this information is rupees 75,000. Now let us move on to the numerator part, that is cost of goods sold. How do we calculate cost of goods sold? Cost of goods sold can be calculated as a difference of sales and gross profit, that is sales minus gross profit. In this case, sales are given to us but gross profit is not there. So what we can use is the direct formula. Cost of goods sold is equal to opening stock plus purchases plus direct expenses. But in this case, no direct expenses are mentioned here. So we will straight away deduct closing stock. This value comes as 1 lakh for the opening stock. Purchases are equal to rupees 2,50,000. And closing stock is 50,000. So now students, adding and subtracting this value, that is 350 minus 50,000, the answer comes to rupees 3 lakhs. That means the value of cost of goods sold for this question is 3 lakh. Let us mark it as equation number 2. Once we have calculated both of these values, that is cost of goods sold and average stock, we can then calculate stock turnover ratio. Now, stock turnover ratio is equal to cost of goods sold, and by equation number 2 that we had just calculated, the value for cost of goods sold was rupees 3 lakhs. Divided by average stock. The average stock that we had calculated in equation number 1 was valued at rupees 75,000. Dividing these two, we get 4 times. That means the stock turnover ratio based on this question is 4 times. Now students, you must actually remember that in this question sales and sales return were also given, but they were redundant values. They are not required in solving this particular question as the direct information was also given. So we have used that direct information and ignored sales and sales return.